everyone. I'm Valentina Sanchez Cuenca from the Bird Shops Report in LATAM. And today we're going to talk a little bit about what's going on today in the markets. So we have Larry McDonald, New York Times bestselling author, and we have Robert Battenberg, CFA. He's part of our team in New York. So a little bit about ourselves. We have a Bloomberg live chat with more than 660 buy-side investors. So let's hear what's going on today, guys.
Thanks, Valentina. I'm really proud of Robert. We were invited on Macro Voices in April, and Robert led our team in New York, wrote a report about the M&A cycle coming into the energy space. It was a prescient piece, and now with the amount of cash that's sitting on the balance sheets of these energy companies, we're seeing a very large M&A cycle that's in the early to middle innings. But Rob, why don't you walk us through the chart? Investors want to know, what's happening with energy right now. It was a major conversation piece in the institutional chat behind me this morning with the buy side investors around the world.
Right. Well, so we've seen a number of deals that had taken place in the last month. Primarily, of course, Exxon bought Pioneer, or is in the process of buying Pioneer. Before that, already Chevron made an offer for PDC. And then there's the story that Chesapeake is looking to buy Southwestern, which is primarily a natural gas deal. And this morning, the deal broke that Hess was being bought, or Chevron made a bid on Hess. So that's a lot of deals in a relatively short period of time. We're talking a $60 billion deal this morning. We're talking about a $65 billion, $69 billion deal for Exxon. That's a lot of concentration of M&A activity, and a lot of people are wondering why is this happening now. And I think some of the important reasons why Hess is willing to sell itself to Chevron and why Chevron is willing to buy today is, number one, Exxon is busy digesting the Pioneer deal. So there can be a bidding war between the two. So the white knight, Exxon.
So in other words, Exxon's a little, overwhelmed, with this current deal. So there's an opening for Chevron to buy Hess.
Yeah, Chevron does not want to get caught up in a bidding war for the asset. And, one could argue that Hess will be an attractive deal for Exxon as well, because Hess and Exxon share the big property in Guyana that everybody's talking about and raving about now. Okay, so Chevron is now on the sidelines because they're basically digesting Pioneer. So at least in the United States, they're not a viable competitor for this deal. And there's another very important reason why, and this is also why initially we argued that there would be an M&A cycle starting, and it's regulation, right? In Europe and the United States, we know governments have become more adversarial towards the oil and gas industry. So oil companies are figuring, rather than us spending an enormous amount of money to dig for oil, 15-year cycle, we'll just buy readily available assets. We'll maximize those. And God knows what's happening in 10 years, whether combustion engine cars are still being sold. So that's one important driver for M&A.
Hey, Jose, can we have that chart, please?
Sorry?
We want to get the chart up.
Yeah.
So, yeah, keep going. But we want to get the chart up.
So the last reason is that we're right now have basically entered in a fully fledged multipolar world, right? The United States has created a lot of enemies, Russia, China, at least an economic enemy, skirmishes in the Middle East. So oil companies would like to have assets that are very close to home now. Chevron is all over the world. They're in Kazakhstan, they're in Angola, they're in Brazil. They have all these projects in Africa, and it's all great. But, those are, there's a level of uncertainty overlay, and they'd rather buy some assets here at home. And Hess is in Guyana, which is really like a stone throw away. It's in the Gulf. And then they have big properties in the Bakken Shale in North Dakota. And in the Gulf of Mexico. So that's very attractive for Chevron to be able to buy these assets that are very close to home. This is where the demand is for now in the U.S. Rob, this is also an area.
Let's have a conversation. So in other words, companies like maybe a Southwest Energy or a Chesapeake with large U.S. assets, maybe an Antero in what we might call safe. So if we're in a multipolar world, as we talk about in our book, versus a unipolar world, those safer assets in more tranquil and more trustworthy places, we could see a premium develop there.
Yes, I think they're becoming increasingly attractive. You don't know what's happening in the rest of the world. There could be a coup. We've seen like half a dozen coups taking place in Western Africa, right? Angola is, I wouldn't say, but it's right there. We've seen, of course, and the Middle East again, a heightened level of uncertainty and a burst in violence. So these are all, layers of uncertainty. Of course, we saw earlier, or so we saw in the beginning of 2022, both BP and Shell had to write down all their Russian assets because they had to leave that country. So in that kind of an environment, domestic assets in Europe too, of course, are becoming more attractive because they're in a stable environment with the rule of law. And although there's regulatory pushback, those assets are not going to be repatriated. I think a sea change, one of the biggest developments was early in this 2023 when Chile essentially rewrote the contracts for the lithium miners. I think it came as a shock for a lot of companies in natural resources because Chile was the utopia for metals and mining companies
Hey,
for the
Rob. So
longest
yes, so
time. It
just to
had
bring it back to the investors watching us right now, we don't want to get too in the weeds in Chile, but when you look at this chart, looking forward, not backward, looking forward, where are we now in the M&A cycle for someone watching us right now? What does this mean to investors watching us right now?
So you see all the arrows, right? Exxon is going for Hess. Sorry, Chevron is going for Hess and going for PDC. Exxon is going for Pioneer. Chesapeake is going for Southwestern. So you're looking at the chart. It's a breakdown in companies, how much of their revenues are coming from oil and how much is coming from natural gas. The higher up you go, the more comes from natural gas. And on the other hand, in the other axis, the horizontal axis, it shows you the valuation. So Hess was trading at a big multiple. Conoco's trading at a decent multiple as well, but there's some companies like Diamondback, EOG. EOG is a very attractive property. Everything is domestic. It's very underleveraged. It's all in North Dakota, and it's all shale properties in the United States. And I think it's a really attractive takeover candidate. Diamondback, very similar story there. A lot of that production is coming from oil. That's where you want to be. That's the sweet spot, domestic oil production. And because it's a very easy way to add reserves. And if you're an Exxon, or if you're a Chevron, if you're a Conoco, or if you're a Shell or a BP, and you can buy EOG or Diamondback, you can basically offer a 15-20% premium and it's still valued below your own valuation, so it's immediately accretive to earnings, and that's key here.
Okay. So, Jose, next chart, because I want to ask you a couple of questions about, for investors looking at us for the next, okay, where's the trade for the next 5-10 years? Right now, energy's gone from 2% of the S&P composition to 5, which is still very, very low historically. I think in 1980, when we had kind of a multipolar world coming out of that, 1968 to 1981, it's a multipolar world, higher bond yields, higher inflation. And I think at one point, industrials, metals, oil and gas were 50%, 50% of the S&P. What do you see here, Rob, in terms of the long-term trend? It looks like everybody's in the last decade's portfolio. Everybody's literally in the stale last decade's portfolio. Doesn't this portend to maybe a higher composition in the oil sector in the S&P?
Yeah, and also, if you think about it, if you always say there's $2.5 trillion in energy and there's like 20 trillion in Nasdaq stocks. Well, if you have $2.5 trillion in energy and there's 100 energy companies trading. That's about 25 billion per energy company on average, right? Of course, with Exxon, which is a much bigger market cap, Chevron, and then you have a whole bunch of small ones. But it gives so much M&A activity, so many companies taking over other companies. There are deals that are done either in cash and equity. But in the end of the day, if that cleans up the space so much that, you know, maybe in 5 years from time, you have only 50 companies left. That's $50 billion per company, right? So yes, there will be a big concentration at the top, but for active portfolio managers, they can only hold 5% per individual company. They're going to have to spread out that remaining capital over as much less companies, right? If you have that much of consolidation taking place in an industry. And quite frankly, the US energy space is extremely fragmented still. You have dozens and dozens and dozens of smaller energy companies, and they are increasingly willing to sell themselves because of the regulatory environment. So maybe the amount of money that is pouring into energy companies will increase, but it will also be over a lot, a shrinking number of publicly traded companies as the space gets bought, as the space becomes consolidated. So that's a very attractive setup.
Well, hey, Rob, that was outstanding. We kept it around 10 minutes. Valentina, thanks very much. For institutional investors or family offices, you can join us here in our live chat on Bloomberg or reach out to Valentina. Valentina, take it from here. Thanks very much for joining us.
If someone's interested, I can offer you guys a 21-day trial. You can reach out at Valentina at theveryshopsreport.com. That's Valentina at theveryshopsreport.com. That's going to be down below. Also, remember to pre-order our upcoming book, How to Listen When Markets Speak. The link is going to be down below as well. Thank you very much.
Thanks, Rob. Outstanding job. All the best.
Great. Thank you.